Hello everyone, this is Juan Sarmiento and today is Friday, August the 4th. Okay, so here is my account. These are all our current positions. And so far this year, which is really only a couple of months, we have gotten $9,957. So it's close to 10% of our account. We started with 100,000. So not bad. In the IRA account, which is essentially a copy, in the margin account, which is a copy of the IRA account, we have the same profit, obviously, but our investment is much less. And that's because we have margin requirements. Make sure that you consult with your broker as to whether you could qualify for one of these margin accounts and whether that's wise to even do, because at some point you can get margin calls. Note that we have this cash and sweep vehicle. That is the margin, which means if there is too much here that you cannot cover, you will get a margin call. And right now we have plenty of liquid value, as you can see here. Okay, so please consult your broker about that. I don't want to get into too much detail. I just put it here for comparison. Okay, but in the IRA account, which presumably if you have a investment account and you're not too much into trading and margins, perhaps you are intimidated by that. Well, you can keep an IRA account. It's very common for anybody to invest, and then you would need more cash to do the same trading, but the returns are still very, very nice. So you can see them. The IRA account will be a 10% return. The margin account will be a 20% return. Okay, because you invested 50,000, you're getting 10,000, so that's a 20%. Okay, that's about it. Let's go through our trades here, because today is expiration. Some of these are expiring. Go to the activity and positions and you would see that some are marked ITM. That means they're expiring today. Okay, so let's start with, go through all of them just to see where are we at. Okay, so here it is, the first one. I'm gonna select the simulation here, because this is already, if we have made several trades, it's all registered here, it's all accounted for. Let me go to the monitor tab, account statement, and say 100 days, not that it requires that much, but 100 days to see back. And you can see that we started this position back in May, and then we did an additional, obviously the original call expired and we added a new call, and then we did a rollover. So all of these are added up, and so the debit, and so we have added original debit, and then we have a debit of 20 cents, and this is a credit of 1.15 or 49 cents. All this added up gives me the value of the current trade. Okay, so, and this is what it looks like. All right, this is the current price. Let's reset the slices, and you can see here is the current price, and you can see that it's up here, and which is the maximum value that we were expecting. You can show it like this, and the value so far that we have gotten from this trade is $1,953. Okay, if we wait a little longer, we will get $10 more, $9 really. Okay, and you can see that it says that it expires next week. So couldn't we do the rollover right now? Yes, we could. Go to the Add Simulated Trades and see what the value of that option that you have. Right here it says position. Look at the value of it. It says here that the extrinsic value is 5 cents, and that's what we are interested in, recovering that full extrinsic value. Okay, so we would have to wait one more week to get those additional 8 cents, or you can just close it. We would click on the ask and we would pay $5.60 to close this position. As long as the extrinsic value is 0 or close to 0, you are better off closing it. But we are going to sell something that is 30 days to expiration, 28, 38. Let's try the September the 8th. And what we're going to look for is an option that has no intrinsic, only extrinsic value. And then click on the bid. Better yet, we can click on the control key and click on the bid, because then we would have the rollover. You see how I am buying back the 37 call, and I am selling at a higher strike price, okay, to obtain the maximum extrinsic value and the minimum intrinsic value. That's why I'm doing it this way. How about if we click here, the bid, and then add the 3. Why am I doing this? Let me show you this. This is just the call that we would be adding, the short that we would be adding. Okay, and this is how much we'll be getting from that in extrinsic value. Remember, there is no intrinsic, there's only extrinsic value in this option. So if I sell 3 of them, I will get $489 in extrinsic value, because there is no intrinsic value as of yet. Okay, so that is telling me, okay, this option that I'm selling, I'm going to get close to $500, and I'm fine with that. Okay, so I'm going to put here 3 of this, 3, which is I'm buying back the option that expires next week, and I'm selling one that is further ahead in and is higher at $43 a share as a strike price. And so we're selling 3, and this is what it will look like. Let's see our trade here. Right there is our trade. We have made with this trade already almost $2,000 by doing this rollover. Make sure you set this to expiration, to expiration, because then it shows me how much more money I could make. Okay, if the stock keeps on going higher, I would make 26, so an additional $600. Oh, perfect. That is more than $500. So there is also a value that comes from the stock continuing to rally. Okay. You can also say, let's say you tell me, well, I think this stock is actually going down between now and next week. Okay, so I say, well, okay, look at the chart. Is it possible to go down? Well, it looks very strong right now, so I want to take advantage of that rally, let's say. Well, then the rollover would be a good idea. They reported earnings, and it was good earnings, and the stock keep on going, so I think it's going to continue on higher for a little while. So, and then flat perhaps. So yeah, the rollover wouldn't be a bad idea. And here it is, so I'm going to do that. So this is a premature rollover. It's 1 week in advance. You can also do it on the day of expiration. The risk that you run is that you would be assigned the call, which means your shares will be taken away. Well, if that happens, you just rebuild, okay, which is you create a new cover call. Okay, so I'm going to do this. Okay, this is what we currently have. So let's send this off, and then you'll see how I manage that for accounting purposes. Okay, I send it. In the meantime, we continue on here to coin. This one is expiring today. Okay, so okay, that means that this call is 50 and the stock is trading at 90. My God, it really has made a big move. Okay, here it is. All right. Do I want to roll it up? Well, perhaps it's going to take too much of my call, so perhaps I let it go. Perhaps I'm not going to get too much with a call. So how do I pick the call that I would close this and sell to? Because this expires today. These two calls, it says August the 4th. Okay, so that's expiring today, and the strike price is 41. This is not correct. So let's go to the monitor tab, and here you have it. Let's set a calculator here. And here we have the original trade was $44.15. And then the rollover from July to August and the strike price of 41 actually cost me $13.40. So I'm going to have to add to my cost. All you need to see is this debit and debit. So you add the two, and that's my cost. And my strike price is here 71. So that's what I'm going to do here. August, and the strike price is 71, not 51. And my cost is what I calculated, 57. Okay, so this is my actual trade when everything is considered. And we have made $2,400 with this. Would I do the rollover, meaning close today's call? That's not difficult. In fact, there is probably no extrinsic value left on that one. So let's see, there are two of them, so look at this, there is no extrinsic value. So we took all the extrinsic value and added it to my trade. That's a profit. So let me go to click on the ask, because I will be closing that 71 call. Let me correct this here. And I'm going to sell another one with 35 days to expiration. Could be the 28th. I go for the 35 and look for that option that has 0 intrinsic and maximum extrinsic, and this $8. That's very high volatility, obviously. So I'm going to click here, press the control key, and click on the bid, and that's my rollover. And you see, it's gonna cost me, so that's an additional $1,000, $2,000. So you have to have the cash to do this. And this is what it would be like. So without the rollover, we already accumulated $2,690. Okay. By doing the rollover, I'm closing the call and it's selling at a higher strike price, and we could potentially make 45.30. That has been very good, a very good trade. This coin, presumably because of the high volatility, keeps a very high volatility. You can check the implied volatility is 80. But doing this is going to cost us how much? Create duplicate order, confirm and send. We would have to pay an additional $2,190. And so, do we have enough cash? Yes, there's 4,707. But the problem is that if the stock suddenly collapses, you may have a call in the margin call in the non-IRA account. Here in the IRA account, that's not a problem. Okay, so let's do that. And let's confirm and send that. And we wait for that to execute. In the meantime, let's go to Etsy. This one has gone against us. Look at this. The stock has collapsed after earnings. Okay, you should be aware that that could happen. Okay, but if you go to the monitor tab here, you see Etsy here. Yeah, we have a little bit of a loser. This was a winner before, but with the collapse of the stock, we have turned it into a bit of a loser. Okay, but it doesn't matter, because all we care is that we collect on that premium, and then eventually when the stock goes up, we just have the premium and the stock went up anyway, back to what it was, or perhaps it just stays there where it is right now for a long time and we just keep on collecting. So I'm not too afraid. You have to let go of that anxiety. But here we have the August 18th. That's several days to expiration, 14 days to expiration. So you need to look at the option and see, okay, that's 11 cents. Okay, so yeah, I wanna roll it over. In this case, the strike price of the option that I have to buy back is 100. But look at this, the stock is much lower. So in this case, we're gonna have a credit. So let me just click here on the ask, and we're gonna close that for 12 cents. And we're gonna sell this one here with the zero extrinsic value right here. Maximum extrinsic value, minimum intrinsic value. So I'm gonna click here on the bid, press the control key and click on the bid because that's the one I'm selling, and I'm getting a credit of $4.16. Let's click once more on the bid so that we can see what is it that I'm getting. And here it is, and I'm getting $410. At this point, we're not getting the 500 that I wanted, but we are already invested in this, so we keep on playing it, okay? Because we're borderline. You can just close it and forget about it and call it a zero gainer. I want to keep trying this to see what kind of result we will get in the long run if we play it this way, okay? That is, do it roll over. And here is my trade. Okay, as you can see, it's very close to the break-even point. And with a rollover, this is what it will look like. My maximum profit will be $404. Okay, so even though the stock went down significantly, we are breaking even. Okay, look at the chart. This is where we were. We entered the trade, it came down, we are breaking even. So let's send that off. Okay, let's move on to FL. And in this case, we have plenty of value here. There's plenty of time value in this, so I move on to KSS. This one here, there is still some value on that. I'm gonna wait for next week, and next week will be the 11th. Okay, so you could always roll this over, look at the value of that option, 4 cents. Okay, let's roll it over, why not? Okay, in this case, I'm gonna close this, so click on the ask 4 times, and let's look at the option we would sell, again, 30 days to expiration. So we're going to September the 8th and look for that option with zero extrinsic value, and here is my bid. So I'm gonna click on the bid, press the control key 4 times, and that was my coin. We will take care of that in a minute, okay? Let's look at this KSS. And so the one that I'm selling now is 929.5. How much are we getting for that option here? Let's click here on the bid, and we're gonna do for them just the one option, all right? This is the option I'm selling. I have the potential to getting $952 from that one. Wow, I would say this is great, okay? It's worth the risk. Okay, so I'm gonna do the rollover, and here's my trade currently. Maximum profit, $1,064, pretty much close to that. And with my rollover, the maximum profit will be $1940. Sounds great, why not? Let's confirm and send. Okay, let's move on to MOS. And here's my trade, and this one, at some point we were losing and now we're gaining here. Okay, but there is still value here. You can see the blue line is the line at expiration, the value of the expiration. This magenta line is the current value. So there is plenty of difference there. So we just wait. MU was the one that wasn't working out for us. Okay, so we are trying to recover the money on that one. Here, in this case, you can see that it's very close also. That's next week, 62. The stock is trading at 71. So let's do the rollover and see what we get on that one. Okay, starting with closing out the position. I'm doing several of these, so you're getting the hang of it by now. Close the option that we have open. It has 11 cents. Okay, you know what? We can wait. We can wait until next week. Okay, because it's got some value there. It's very unlikely that with some extrinsic value that you would get that option taken away, assigned. Okay, let's move on to Roku. This one also expires today. Okay, so this is what we have. This is our current position. We have $1,000 on it, almost. And in just a few minutes, it will expire. Okay, let's do that again, okay? This is my current position, and I'm going to close. The option we have opened by clicking on the ask, and that's to buy it back for $24. Okay, what about the option that we would sell? We will go to the 20 days to the 28 to 35. I'm going to do the 35 again. And what would be the option that I would sell? This one here, the one with the most extrinsic and minimum intrinsic value. So I'm going to click on the bid, so I get a subtraction, a call. Okay, so I would be selling the September 888. Okay, that's $17.75. All right, here's the risk. If I do this, I have the potential to make $15.98. Okay, so let's look at the option itself. Bid, and you see that we have the extrinsic value is $6.10. How much is that? $610. Right there, $610, 600. Good enough. Okay, so I'm going to do that rollover, and this is the current stock. If I do the rollover, we have the potential to do $15.95, and my goal is to make every trade about $500. So yeah, we will be making that and then some. So obviously it says here it will cost us. It will cost us. Oh, there is a problem here. It's telling me that I don't have enough buying power for that. This is because there is some, I just did a rollover and that generated some cash for me, I think. Okay, so that's not gonna work. So, well, that's just too bad. All right, so what do we do? What do we do? We should be able to do it. Let me see. Yeah, so my resulting buying power will be negative. So we can't do that. Okay, so because we would have to pay a debit, it's not gonna work. So what happens then? Well, then you just let it go. You just let it go. So by the end of today, the option will be assigned and my shares will be taken away. Okay, so what we made is what we made. Okay. And we made $973. Let's move on to SPWR. In this case, it expires today, and this one has not worked very well for me, so I'm in a recovery point of view. Okay, so in this case, the call is actually value 0, because as you can see it's 9.5 and the stock is trading at 9. So I'm going to do the rollover, see if we can do it. In this case, we just go like this, analyze rolling. And I'm going to close the 95, but I'm going to sell the September the 8th, but I'm going to sell the 9, not the 9.5, but the 9. And that gives me a credit. Okay? And we're going to do 9 of those. In doing that, you can tell, how is that good? Well, my trade right now is here. This line, this blue line, the magenta line, is where I am, and it's negative $779. That's how much we've lost on this one. Okay, because of the stock price declining, we're still making that extrinsic value. But if this trade works, we land here, then our loss will be reduced to negative 126. So this is, eventually we will recover, and that you have to keep that in mind. Don't look at short term, look at it longer term. You still have the stock, you're still selling those options, so that eventually they will all be profitable. Eventually. Okay, so let's confirm and send this. WDC, this is expiring next week as well, and we can do the same thing. I'm tempted to just let it go because time is running out here. I'm doing all of these. So I will do this very quickly like this. Click on the ask 3 times. Look for the option with 0 extrinsic value right here. So I go control, bid 3 times, and again it's gonna cost me, so that's probably, we wouldn't be able to do it, so let's wait until next week. You can see that the buying power effect is negative, so that's not gonna be allowed, so you can't do it. Okay, so this one we will do next week, okay? And the X, this is expiring today and it's below, so we can do the same as we did for SPWR. So this one has fallen below my strike price, but not by much, so that means we have made money on this one. Okay, so let's roll it over. First, look at the trade here and click on the ask. You can see that it's 1 cent left there. Do it 5 times. And then sell the September with the best extrinsic value, right? This one here at 25. Press the control key and click on the bid 5 times. And you can see the, let's look at the option itself 5 times. So this is what we are selling right now. Only this here. And it has 470, very close to 500. I'm happy with that, okay? And we're doing the rollover so that this is our current trade and this is with the new effect. We could potentially do $1,830. Great. Okay, I think we have seen many details of this trading strategy. Okay, that got filled. So I need to also do the same trades for the um, all these trades need to be done for the margin account. So I can simply create this trade, create duplicate order, confirm and send, and just change the account to the margin account. So I can send those. Go back to the IRA and do the X. Create duplicate order, confirm and send, and change it to the margin account. Okay, so that we continue to emulate the same trades in the margin account. And the X got filled for the margin account. We have other 3 trades on the IRA account. And we just need to change the account. All right, that was the APA, ETSA, or ETSI. And I would adjust if necessary, okay? So what are we missing? KSS and SPWR. Now let's go to IRA account again. Create duplicate, confirm and send, and let's go to the margin account and send it. And finally, I forget which one was it. Let's go to IRA, KSS. Go to the margin account and send it. Okay, let's go to the IRA, make sure we're not repeating something. No. This is the margin, 1, 2, 3, 4, 5. Okay, so what I'm going to do is I might adjust a little bit, not a whole lot. These trades really should get all filled. But a few cents here or there won't affect much the result. Okay, let's go to the all accounts and go to the account statement. And here is my profit for the year is almost $20,000. Okay? So even with a couple of losers, you can see that we have losers. They're not all gains, but the majority has been great. And the strategy is to pick stocks that are with high volatility at the lower end of their trading range. And right now you can see that we can't even handle them very well because there are too many of them. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We should really have 10, okay? But one of them will be taken away, correct? That is expiring today. Okay, that's all for today. Thank you very much for joining me and see you next time. Bye-bye.